What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is November 6th of 2019. Well, folks, I hope you all are having a fantastic day wherever you are, and in today's update, we've got a wide range of topics to discuss, but I'm mainly going to focus in on trying to answer a very key question, and that is why I'm so invested and interested in cryptocurrencies out of any market. So I'm going to be talking about that and trying to provide some interesting perspective as we dive through a variety of other markets. But outside of that as well, we've got some news for Travala and also a non-sponsored interview with Alex Majensky from Celsius Network. I think you guys are really going to like this one. It's a good long conversation. But let's go ahead and dive into the video right after our quick sponsor. Our sponsor for this episode is Travala.com. Now, for those of you out there who are planning your next trip for either work or leisure, I highly recommend you check out Travala.com to place your next hotel booking. They not only provide a wide range of selections for places to stay along your travels, but also can provide upwards of 15 to 40% in discounts compared to other leading rates on booking websites. And to top it all off, you can use Bitcoin, Litecoin, XRP, and a basket of other cryptocurrencies to place your next booking. So if you want to learn more about Travala.com, check out the link down below in the description to find out more. Alrighty, everyone, so let's go ahead and start off by taking a look over the market real quick. As we can see over the last 24 hours, most cryptocurrencies are ticking to the upside at the moment. Again, not many players down in the red. We are starting to see more positivity return to cryptocurrencies. And again, we're seeing this in a lot of different plays across the market, right? Some of the oversold plays, NANO has been rallying very well as of recent. We've got Komodo doing quite well, again, coming out of the shadows and stuff. A really interesting project that a lot of people haven't looked into. And iExec which, like Chainlink, is working towards the Oracle solution. But again, right now, it doesn't seem like there's any serious consistent trend here. We are seeing, though, overall, a good amount of green price action across the board, which is good to see. And we can see this being reflected in overall market cap, right? We can see markets ticking up, volume holding relatively strong, and a lot of this coming in for other coins as we continue to see Bitcoin dominance back on the trend of declining after the crazy, massive move to the upside that we saw back about 2 weeks ago. Now, we'll take a look here at Bitcoin. I don't want to do much TA today, guys, because, look, guys, with this channel, there's something that you're going to see very consistently. That is, if there's not much going on, I'm not going to try to shove stuff down your throat, even if that sounds very kind of atrocious. What I mean by that is I'm not going to continue to repeat the same old news, right? If you come back to this channel, guys, I want to make it so that every day you come to a daily update, you feel it's valuable, right? So I'm not going to sit here saying Bitcoin's going to a million, things like that. What I do want to talk about today is why I stand by the convictions that I've presented, that I believe Bitcoin and cryptocurrencies, at least for me and my risk appetite and what I'm looking for over the next decade, I believe confidently that Bitcoin and cryptocurrencies are going to be the best market to focus on over the next decade. And it's the reason why I'm so blessed out of all the YouTube channels I've created over the years that I get to have this cryptocurrency channel. It's a channel for general finance, but of course I obviously focus in on crypto and use most of my time to talk about crypto. And I want to explain why, okay? So as you all know, I'm a macro trader. I will park my capital wherever it's best. And I will share with you guys, even if you guys may be more invested in crypto, or let's be honest, I think we all have a bias for crypto because we understand it so well. Because of that, I will always be consistent in this case, no matter what. Even with that personal love for crypto, I will always let you all know where I'm most invested and where I'm most interested, right? Because I want you all to come back and see consistency. I want you to see that I, present good information, right? That's my job. And in the case of crypto markets, we've obviously, there's a lot of simple things, guys, that very clear truths, right? Bitcoin has obviously been, if we take a look here at BLX, right? Oh, sorry. TradingView always prompts it here to take a look at the wrong one. There we go. So as we can see here on the logarithmic chart, Bitcoin consistently is, sorry, let me remove this. So, all right, back to what we're talking about, guys. We can see here Bitcoin consistently has been one of the best performing markets. If you take a look back, there are very few days where you'd actually be down on your investment for Bitcoin. It would be some time period here and a little bit back here during the corrective period for Bitcoin, as well as a little bit on the upside. The vast majority of Bitcoin's history, if you just held your money, you'd actually be up on it. And there's a reason for this. There's a lot of principles that come into play. We can take a look at a lot of the data science models for Bitcoin. This is the stock to flow model that really takes into mind both the mining schedule and the halving schedule for Bitcoin, as well as the price, and also measuring over time through the different colors on the price dots here how far away we are from that halving. And we can see here that every time we get around to the same color range here where we're really just a few hundred days away from the halving, which is expected to be sometime in May of 2020, we tend to find that this is a prime time to get bullish on Bitcoin and that we have parabolic run-ups. If you understand the mathematics of Bitcoin, it makes sense, right? And this is not to mention, again, I'll actually just show you, just to kind of justify my statement as I was talking about earlier, there really aren't many days where you'd be down on your investment for Bitcoin. And this is a perfect chart to see that, the profitable days, right? Now, I know many of you probably bought some time here between 10,000 to 20,000. If this was maybe your first entry into the market, I think honestly a lot of people who bought there have either gotten out of the market or given up. For those of you who are holding strong and are in this market, I want to say hats off to you. And the reason is because you obviously probably see what myself and many others see as well, and that is the longer term picture here. If you have been holding Bitcoin for the vast majority of history, you're up on your money. And this really puts it in perspective. This makes the volatile swings that crypto can have seem minimal, right? And they are. They really are. Because the longer term trend here showcases higher lows and higher highs. Any investor, if this was equity markets, people would be parading it and cheering it and saying that, why would you ever bet against equity markets? Well, it doesn't look exactly like this, but that's what happens in equity markets. It has 50% corrections, but being an optimist, being a bull across the board is usually what you want to look for. And if I saw a stock that performed like this over the last near decade, I mean, there would be no doubt in my mind that I'd want to have a good allocation of it in my portfolio, right? So again, I'm not telling you guys to buy Bitcoin. I'm just explaining the rationale here. Now, as a macro trader, again, as I told you all, I look for the best opportunities. Well, the question is, what are the other opportunities out there? What are the other places I can park my capital? Well, I won't be able to dive into all of them today, but I'm going to be talking about some of the mainstream ones that people usually opt in for, and I'm going to talk about why I'm not interested in them. And outside of that as well, I'll also talk about a few other sectors that interest me. So the first one here that I think a lot of people would talk about is emerging technologies, and more specifically, companies that have come to the form of IPOs and recently launched, right? And you had a lot of companies this year coming to market. I mean, there's a ton of different companies that have launched. We'll go run through some of these: Uber, Lyft, Beyond Meat, or Beyond Food, like all these different companies and stuff. Or sorry, Beyond Meats. Basically, all these different companies that are coming through and providing, next kind of generation companies and technologies that are going to be a standard staple in my generation and the generations that are coming afterwards, right? So these are things you would obviously think you'd want to have a piece in your portfolio, right? Well, Uber, when it came out at around a an upper 60 to $70 billion valuation, right? And ever since its IPO is launched, it's dropped about 33% from the open, right? We'll take a look here, get the actual percentage. Yeah, I'm actually pretty much right on the money, 33.3%. Dropping about $20 billion so far in market capitalization. Let's take a look at Lyft, right? Lyft's got to be better, right? I mean, we've obviously got these amazing companies that are revolutionizing the space, and, well, it's even worse. I mean, if we take a look from the open here, right, we're down 53% for Lyft. Down from around a $25 billion valuation to a little over $12 billion. It's not good to see. But they're not the only IPOs. I mean, we can go through the list here, guys. Beyond Meats, right? Beyond Meats coming back down after a crazy parabolic rally where a lot of retail investors got duped. We'll be fair. It's still up, to be absolutely fair. And at a $5 billion valuation, it's still doing pretty good. But it's one of the exceptions. Take a look at Slack, one of the major messaging applications that aren't making any money, but is down about 50% from its relative open, a little bit less. Take a look, for example, one of the few exceptions here, again, alongside Beyond Meats, would be Zoom Technologies. Oh, oops, I always forget that you have to type in it's ZM. So Zoom, almost back down to where it opened, right? So I'll be fair here. I even showed some of the exceptions here. I'm not just going to show you the stocks that show all 50, 60% down. But you can see here that even for the IPOs that have reversals and they have this kind of mania when they hit the market. And for those of you who may not know, IPOs stand for initial public offerings. It's basically when a company goes public on the stock exchange, usually in the United States, but it could be in a variety of other major markets across the world. And they tend to usually go through a 50 to 80% decline after launching, or they sometimes have an IPO reversal where they open up at a level, have a slight decline, and have a rally, but usually still afterwards tend to fuse out and drop below where they opened, okay? So what's my point here? As a macro trader, I like to invest in emerging technologies. I usually still steer clear of IPOs, and quite frankly, all of these have come out at ridiculous valuations. Silicon Valley has basically propped up these companies to absorb expectations, right? Because they are in many ways game breaking, and they are going to be companies that probably exist for the next few years. But a lot of them won't. And a lot of them are extremely far from being profitable, to put it simple and put it kindly. So my major point here is that for those of you who are maybe interested in emerging technologies like IPOs, I wouldn't say to steer clear from these companies, but I wait for 70 to 80% corrections in these companies. I do not believe, as much as I love Zoom technologies, I use it in my business. A lot of the time people usually do Zoom calls with me. I'm not going to buy this at an $18 billion valuation when it's not making any money and it doesn't have any track record of making money soon, right? That's just my personal opinion. Same goes with Uber. Same goes with Lyft. I think they're revolutionary companies, but they need to get to a stage of profitability before I'm interested in them. And it's important to understand the models of these companies, right? A lot of people don't understand how startups actually get to the stage of an IPO. This is the last stage. There's a lot of stages beforehand, from seed funding. I'm doing a startup myself. I'm definitely looking to probably do seed funding quite soon for it, right? But that is the complete opposite end from an IPO. In fact, you go from rounds where you have short, small, early stage investors, usually an angel investor, some sort of maybe family and friends. You go through doing stock options for certain individuals, maybe employees who are working at your company. And then you do a series A, B, and C where you start to talk to VCs. And then you go through and have some form of an exit. And this is usually in the form of an IPO. And here's another chart that shows it here, right? The risk diminishing over time and the increase in revenues, right? Again, going from family and friends, angel investors to venture capital, private equity, and an exit or an IPO, right? Now, the thing I hate, and luckily it is changing in the United States, is that the regulatory environment has been restrictive over a lot of people. And it used to be that only angel investors really could invest in these companies. Again, if you were doing something a little bit more kind of small scale, you could have family and friends investing, but you can't do a wide raise offering to retail investors. At least you couldn't a long time ago. Over all the companies we just talked about, they lived in an environment where it was only angel investors, accredited investors, people who had either $1 million net worth or were making about $250,000 a year. Well, do you think that's very fair to say that you can only buy something when it's at the top? And that's exactly what you're doing when you're buying Zoom Technologies, when you're buying Beyond Meats, when you're buying Uber, Lyft, Slack, all these companies. You're buying at the top. And how does this sound familiar to something you might be familiar with? For those of you who maybe just traded in cryptocurrency markets, does this sound a bit familiar? Was there ever a fascination, maybe a 3-letter acronym, that yet again repeats the same kind of price action in same exact model to some degree? Well, if you're thinking about the ICO model or the IEO model, not just railing on Binance here, all exchanges, and I guess us as a market are guilty of not knowing about this, right? The IEO and the ICO model are very, very similar, right? It is a matter of getting in early and getting out when there is a liquid market. And I've been talking about this for a long time on my channel, but I digress, guys. I can talk about it more if you guys would like me to dive into it in a separate video. This is just something that I think is important to get across. Now, this plays into the picture of equities as well. These companies are now becoming a part of these major indices. And as we talk about the Dow Jones and NASDAQ and the S&P 500 and the broader equity market, again, we have to talk about buying low and selling high. It's a very simple principle. I do not want to buy in equity markets. This is the Dow Jones, bear in mind, after we've pulled more than a 3x off the lows. Not to mention, we've pulled more than a 100% return from the highs of the previous bubble in 2006 and 2007. That to me does not sound very settling. And again, we're talking about the Dow Jones, which is probably the lowest returning and the lowest correcting out of most indices, right? So that's my concern there. I'm not going to buy into an equity market, which just recently saw an inversion of the yield curve. And we tend to know that about 4 to 6 months after the inversion of the yield curve, we enter into a recession, okay? So that's my kind of thesis here. Equity markets do not excite me. So what does excite me? Well, what excites me is precious metals. Precious metals excite me. That's something that I definitely would consider allocating outside of crypto personally, because these are hedging assets. We are getting out of a time, as we were talking about with all these IPOs that are hitting the market now. Silicon Valley is exiting. If you're kind of getting late to the party, if you're trying to take your company public, you're trying to raise capital, this is not the time. Well, I'd say this is probably the last stage to do it, right? At least to get easy money for a lot of startups that really don't have monetization models. It's going to get much more strict. And you can see here that gold has been performing exorbitantly well over the last last year and the last few months. It's been up about 34% from bottom to top here. Right? So still maintaining up around 30 to 31%. Another thing that interests me is energy markets. Over the next few decades, even though I do believe we are going to hit a recession, I think that we're going to continue to grow after that. I think we're going to, I view the future very optimistically, right? I'm a very optimistic person, and optimistic investors usually win out in the long term. It's proven. But I will say this, we need to look for emerging sectors of energy, right? Sectors that are going to satisfy the energy needs of the world. And for me, that comes in the form of two key markets. That is renewables in this case, predominantly solar technology, as the cost has been scaling lower and lower, and as we're kind of waiting on the kind of revolution in battery technology that's going to be needed to scale solar. Once that battery technology comes out, and when we continue to see the cost of solar drop by another 10 to 20% as efficiency increases, we are going to see solar dominate the world stage. It's very much on the cusp of a big shift in this case when we start to compare energy sources, right? People are going to go for the cheapest option at the end of the day. As much as they want to meet, reduction of emission standards and things like that, it's going to be the cheapest. So it forces solar markets and the companies innovating in this sector from there's all kinds. First Solar, Canadian Solar, there's SunPower, there's Solar City, which is a branch of Tesla now. There's so many companies, and also major players like GE that have been investing in wind and solar as well, that are going to have to push to be the lead on this market when it does leap up and after it breaks out of this ascending triangle, right? This is a bullish pattern, but it's setting it for the long term sometime in the mid-2020s. So that's when I'm going to be looking for this, is when this starts to really elevate outside of this range here and break up to start making up for a lot of the hyped valuation that was previously given back in 2008, as solar was the hot sector back in the day. Another one of those energy sectors that I believe is going to satisfy us for our energy needs for the next few decades until we have fusion reactors, which is something that's being worked towards. And then also, again, the other kind of scalable battery technology for renewables. My other bet is going to be in uranium. I really do believe uranium is still going to satisfy a ton of the needs of the world. I mean, you have countries like France that have 70 to 80% of their, it's so funny, the people there don't like uranium, but at the same time, it provides zero emission energy for the entire country. It makes them one of the greenest countries in Europe. And uranium has been basically going through, again, a very similar pattern, ascending triangle with lower highs and a generally similar resistance range for its spot price, right? So these are futures contracts trading over uranium, but you can take a look at uranium spot online. Cameco, which is one of the big companies, has a price chart that's going to look very similar to this, but it's a line chart. And my whole goal is I like to buy low and sell high, right? So whether it's directly holding uranium, right? I mean, there's a few ways you can buy these futures contracts. I'd more specifically like to buy something like URA, which we've talked about, right? Which has been relatively, again, pushing sideways. It's been declining a little bit more from the low range that we would have bought it at. But I still haven't bought a position. I'll let you guys know if I do. URA still does interest me. It looks like it's still going through that bottoming phase here. And also looking at a few individual uranium companies, UEC, NXC. There's all kinds of different uranium plays out there, right? So these are the things that excite me. Anyways, if there are any of these markets, guys, that you would like me to dive in deeper to, I want to make content for you guys. Leave a comment down below. If you see one that's similar to what you want to see, drop a like. If I didn't talk about something, leave it down in the comments down below. Again, I always want to make content for you guys. I think these topics are very interesting. I mean, you can probably tell I'm just getting in the full swing of my macro trader perspective. But anyways, I want to let you guys know about a few things. A real quick sponsor news mention with our program with Travala, Travala.com. So Travala.com hitting 2 years now in the sense of its company's age, and I think it's extremely exciting to see how far Trivala.com has come. They're actually doing a $10,000 giveaway in this case to celebrate their 2-year history as a company. And if you'd like to learn about some of those details, they're basically doing a general referral campaign where you get $50 for giving $50. So basically, if you refer someone onto the platform, they book for something over $100, that's pretty much most standard bookings for traveling, then in that case, they get $50 in AVA and you get $50 as well. So it's a very exciting program. Again, I'd recommend you guys check into it. And not to mention as well, they've got a competition where they're giving over $10,000 away to different prize levels. And here are the prize details for it. If you want to look more into it, check out the links in the description. I think Trivala is a really interesting company. And again, I'm still a proud ambassador of the company. I think they've been doing a lot of great stuff. But outside of that, everyone, we have got a very exciting interview with Alex. It's going to take up probably the majority of the video, but we had a long conversation. I just wanted to sit down and catch up with Alex when I was with him in Vegas, and I think you guys are going to really like the conversation to hear about what they're doing and also the shared views between Alex and I. So let's go ahead and dive into the interview with Alex Mezhinsky. What's going on, everyone? My name is Nicholas Merton, and I'm here with one of my favorites in the industry. We've talked many times in the past, Alex Mezhinsky, who's the founder of Celsius Network. Alex, thank you for making the time, man. It's
Great to be here.
Yeah, we were joking. We have to do the snap and stuff for you guys, but Alex and I go ways back. We met, back at Consensus, and we had a really good time. Not only meeting the initial time, but just I've been following what you've been doing. We've been doing. We did our podcast, back of almost a year ago. Yeah, you were I think the second or third on the podcast we had. But I mean, you guys have come a long way. I mean, we've been talking on the channel about the growth of the lending space, and you guys, I think, are at the forefront of that. You have the biggest AUM.
Well, you're growing faster than us. Every time I see you, add another 100,000 users. So
thank you.
We're at 52,000 users right now. We have about 120,000 downloads, but 52,000 people did KYC, ML, and so on. So the bar is pretty high. We don't want bad apples there. So we try to really make sure that everybody who joins the community is going to contribute to the community and not going to hurt the other people there.
Yeah, and I think this really speaks to what you're doing, Alex, because you were the first person in the industry, and in an industry that generally doesn't like bankers and financiers. Yes. You were the first person that really captivated me by realizing the fact that there's this massive margin in between what a bank pays on average in a savings account in the United States, 0.09% interest on average, and charging around 15% for credit. I mean, it's been that way for nearly a decade now. And since the financial crisis, I mean, this has just been another hindrance on a lot of people. So you've talked in your presentation about the consolidation of banks and how this has just led to less competition and lower rates.
Yes, and you can, no matter what angle you look at, you will see banks basically extracting more and more and more out of the depositors and paying all of that or most of that back to their shareholders, right? So if you think of banks as institutions, again, their job is not to act in your best interest, the depositors. Their job is to basically extract and deliver dividends to their shareholders. And what we need to create are institutions that are acting in our best interest, and none exist. Your insurance company doesn't act in your best interest. Your broker doesn't act. Anyone with a broker at the end or a bank at the end of their name really is not there to help you at all. And most people accepted that as a norm because they're basically saying, well, it is what it is. What can I do? Right? These guys are giants. I can't do anything.
That's the thing. I think when people consider, they're saying, well, it's a free market, there should be competition. The problem is that the financial sector probably just out of any other industry is the most heavily regulated, it's the most oversighted industry in this case. And because of that, it's very difficult for competition to flourish. I mean, you guys have been doing things by the books, and you're, I think, a wave of new companies and projects in the crypto space that are focusing on this aspect of lending and making it where people can get the interest rates they used to be able to earn in a savings account. And now we're starting to close that margin between what the borrower pays, so they get better rates, and then along with that as well, getting better rates for the lenders and really democratizing a market that was originally just for institutional bankers.
That's right. And today there's kind of three groups. You have the traditional banks who pay almost nothing. You have neobanks. What they do is they basically take the 2% that they can get from the Fed and they subsidize maybe 1%. So they tell you, hey, you can earn 3%. And really it's just coming from their investors. So they are giving you 3% until they have enough customers, and then they're going to sell to a big bank, or they're going to merge with somebody else, or whatever. So, and then the third group is the category we invented, which is basically really acting in your best interest. And the most important thing for every one of your viewers is for them to understand that they are the ones holding the power. You see, the people that feel that they are powerless are really the people who are in control.
Absolutely.
And I know that because with Voice over IP, right? I created Voice over IP, and people were laughing at me in the beginning. You can't fight AT&T. You can't fight all these giant companies. You know, back then it was Bell Atlantic and NYNEX and people like that. And like, you have zero power. And I'm like, no. If you create a service that goes over a different set of rails, like the internet, and it's done for free, basically, all the customers are gonna quit their phone companies and come and join you because you're providing a better service at a better cost. And that's the American dream, right? That's what we're so proud of in this country, of our ability to innovate and create value and deliver that value to the masses. So the banks, people have to understand that when you're every time you make a deposit in a bank, every time you use a bank credit card, you are empowering the bank. Even the neobanks, you're empowering the neobanks. And the question is, do you want to empower the companies that are trying to act in your best interest? Or do you want to empower the people who steal from you every day? So the choice is yours, and the problem we have is that we just don't have enough people. Not enough people have left the banks for them to change their behavior.
Right.
You want them to pay more interest? We need masses. We need hundreds of thousands or millions of people to quit the banks. And then the banks will feel threatened, and they will have to raise their rates. You know, look at AT&T, look at all these other companies now, right? They don't even offer these services anymore because basically everybody's using Skype and WhatsApp and all these other apps that are free, right? So we can do the same thing with financial services. We're going to use the blockchain. We're going to use Open Ledger. We're going to use all these technologies, but we have to hide them so people can just download an app. It looks and feels just like a banking app. You deposit, you earn interest, you can get a loan, you can transfer money to other people. And these are the three services we have. CellPay, you can use CellPay to send money anywhere on the planet. Zero fees, instant delivery, instant. It works as fast as SMS or WhatsApp, right? So, and people don't use that, right? They rather go to the bank, sit there for an hour, fill up forms and do a wire transfer and pay a 30-40%, a $30 fee or $40 fee for nothing.
Yeah,
right?
Alex, I mean, you hit on a ton of points and everything. I think you were talking about the American dream. You've got obviously a long story behind that we've talked about in the past. I think it's a very beautiful story, man. You've done a lot over the last few years. And I love your comparison to VoIP in this case. I think we don't consider the scale of how big WhatsApp and all these companies, we were talking the other day, the acquisition size of these startups, and they're not making any money because they realize that they need to be able to get that user market, right? And it's just by simply providing a cheaper, better service. And that was possible because of voice over internet protocol. And now, as you call it, MOIP, in this case, money over internet protocol, I think it's a great analogy that we're seeing a new wave of banks in this case. I mean, to be fair, there is a middleman in this case who's providing, ability for people to earn interest and lend out to borrowers, and that's the service you're providing. It's a very important one. But banks steered clear of providing a decent rate for lenders and decent rate for borrowers because over time, people just came to accept that that was the standard, as they did with AT&T and all the major cellular companies. And you guys are providing that service, and you're competing against other pools. You're trying to provide the best, the thinnest margins possible to be in the better interest of the community, giving back 80%.
Right, and we're fully transparent, right? So you can audit us at any time. We publish our wallet. We publish how much we earn. And the community, there's a website called Celsians.com. That is actually a community effort to come and audit us. And when we publish a rate, they check that we actually paid that to the community. They check that we earned that. They check how many coins were deposited, where did they go, and so on. So, and that's the beauty of it. Try that with your bank. Walk into your bank, deposit $100.
Is there a public ledger where I can see every transaction,
just say, yeah.
Right? Yeah.
Okay, Mr. Citibank or Mr. JP Morgan, I want to know what you're using my money for. I want to know how much you're earning on my money. I want to see how much of it you're giving me back, and I want to see all of that in full disclosure. They'll laugh at you and kick you out of the bank. They'll close down your bank account and say, you're asking too many questions. So our expectations are wrong, right? We as customers got conditioned to, to not expect anything. We're basically saying, look, we're going to compromise on all of our needs just for the safety of depositing money in your institution. And we should not accept that. I mean, again, this country was built on innovation, was built on freedom, was built on the American dream. and we're just gonna bring back the American dream, make everybody dream again.
Absolutely. I like that, Alex. And you were mentioning one thing in the speech the other day. I think it's not just in the sense of interest markets. I mean, we really need to get people out of the traditional banking sector, these kind of cartel of banks that have dominated. I think it's really the four or five major banks in the U.S. Because there's things, for example, you mentioned overdraft fees that never gets talked about. It was 30-something billion.
34 billion charged by the four largest banks last year.
On the poorest of Americans.
Poorest of Americans, yes.
And it's just so tragic to see that things like that, for example, you shouldn't even be able to overdraft your account, but a bank will do that.
They love it. You overdrafted by $1, they charge you $30. And then you have to go and get a day loan to cover the fees because you were negative, right? You're negative $31.
And you're already, crippled by the
exactly. It's just rates. Silly. I mean, come on. Okay, go steal money from the rich. Don't steal money from the poorest Americans. So. The system is not protecting us. Our governments, our institutions, it's so easy to take money from these people. They're not going to complain. They're not going to file a lawsuit. They're not going to fight with you in Washington or get lobbyists to change the law. And again, the banks deliver 80 or 90% of those monies that they stole from the poorest American to the richest American, to the 1% of the 1%. And the problem is, look, our heroes are the people who own all of those shares. Look, I love Warren Buffett. I met him several times, and I think he's an amazing investor and allocator of capital. But he is the largest shareholder of these banks. He's the largest shareholder in Bank of America. He's the largest shareholder in Wells Fargo and a few other banks.
He's gotten banks out of trouble before and everything. He has a ton of power.
He is, but he does not demand that banks change their behavior.
Exactly.
What he's demanding is that they deliver more and more in profits, right? He's saying, where's my quarterly dividend?
Yeah.
Right? And when you ask him, he says, I don't get involved in politics. I don't get involved with the governance. Well, you should. Okay? If you are the role model, if most Americans think that you are the shining light at the top of the hill, then you need to do that because it's wrong. Okay? And again, look, I'm not pretending to be... I'm part of the 1%. I'm part of the 1/10 of 1%. Okay, so I'm sitting in the table with all these people, and I'm saying this is wrong.
Yeah,
that's all. I'm calling everybody out on it, and I hope that I'm not going to be the only voice around the table.
Well, absolutely, Alex. I hope you aren't as well. And the thing about it, we talk a lot on the channel. We kind of provide a macro perspective on economics. And really, over the last decade, what you've seen is all excess cash that these companies are getting being propped in stock buybacks. And the problem is, you hear Warren Buffett talk about inequality in that case, but he's holding the shares of all these banks. These banks are using any available cash that they have to prop up their own stock, and they're all shareholders, so they're basically selling out into it, or their net worth's growing over time. And I think this is the problem. We have a completely misaligned set of incentives. As you were talking about, we need a competitive framework. We need something that's outside the traditional system, that is definitely doing things by a compliant manner, but at the same time is making sure to push the boundaries as much as possible, making sure to provide the incentives to help its customers. And that's something we haven't seen in finance in so long. It's really refreshing.
Right. And look, I'm a student of history. I pride myself of knowing how everything works. Like, I don't use anything, and I have to know how the camera works and how the VCR works and how the TV works and so on. And I'm saying all that because really we all the innovation in the United States, if you look at the innovation, it's all coming, always starting at the fringes, right? And it takes over because Americans believe, Americans have optimism, Americans love innovation. Right? And that's why something at the fringes, like what we're doing now with crypto and blockchain and everything else, can become mainstream. In most countries around the world, it cannot. Right? Look at what's happening in China. Everybody's excited about using the blockchain. They're creating a centralized system using the blockchain, but it's basically command and control. It's like
it's a complete surveillance system.
Exactly.
I think when you hear China wanting to get into blockchain, it's not for the reasons of letting global capital thrive.
It's 1984. If you haven't read the book, it's exactly that. Big Brother. People were worried about IBM being a big brother. No, it's China, and it's their system. So my point is that it's us against them. Right, and it's the only way we win is if we win from the inside. China's not going to take over the United States. It's not going to win against the United States. It's not going to pick a fight with the United States. it's us hollowing the middle class that's gonna make us fail. And if you're a student of history and you look at how empire after empire lost their dominance, it's always because they hollowed it from the inside. It's either a mountain of debt or a monarchy or whatever that basically made the people leave whatever dream they were living and go somewhere else, right? Just like they came to the United States because they left Europe or they left other countries and so on. So my concern is that the American dream is dying, and the fringes may not be able to take over because the powerful, the dominant want to extract even more. Again, 33,000 families in this country control most of the wealth of this country.
Yeah, it's very scary to think about it. And like you said, if you turn to history, you really find two things that leads to the collapse of empires. As you mentioned, it's obviously this kind of lead to inequality, but it mostly stems from the debasement of money, right? The mismanagement of central banks or central planners.
But that happens after they're already spoiled it,
yes.
right? So like the US dollar is the source of the power of the American empire, okay? If people think it's boring airplanes or movies, they don't understand anything about anything, okay? So yes, our culture is important and people love America and so on, but the source of power of this empire is the fact that it's the reserve currency of the planet. 90% of all transactions on the planet happen in US dollar. If Japan is buying oil from Saudi Arabia, it happens in US dollars, right? And so on, so on. Gold is denominated in US dollars and so on. So because of that, we get the benefit of, even though we are 5% of the world's population, we get the benefit of 90% of the world using it. Now, they will use it as long as we do the right thing. But if we keep printing trillion-dollar deficits, borrowing from our children, from our grandchildren, right, reaching far into the future, grabbing their value, right? When we print a trillion-dollar deficit, we are borrowing from the future, right? And we're putting bricks and bricks of weight on our children's shoulders in the form of debt. People don't understand that. They think, you can print as much as you want, nothing will happen. Yes, nothing. You can stand in the lighting and nothing will happen until you get hit in lighting, So the event will happen, and again, we will look back at it and say, gosh, how come we didn't understand this? How come we didn't understand that, of course, you cannot continuously print dollars and expect nothing to happen.
It's very sad. I think we've gotten to a point now where there's things like modern monetary theory and stuff that are just kind of getting spewed out, where it's like we can just print as much as we want. The government can cover the cost of just about anything we can dream of.
And because it worked for so long, people look at us, right? We are preaching Austrian economics. We're preaching deflationary systems, right? The Bitcoin is a deflationary system. Ethereum is a deflationary system. More users, less supply, deflationary system. The opposite of what a dollar is, right? And they think that we're in the fringes, right? We are the 1/10 of 1% that is screaming loud, saying, "Hey, there's a problem here. Hey, there's a problem here." But if people are only going to switch when there's a disaster, then it's going to be too late, right? And what we need to do is really, again, like I always say that, right? We need to bring 100 million people into this fringe because we got to give them something they need today. If we try to sell them on doomsday or we try to sell them on store value or whatever, that is not enough, right? We tried that for 11 years. We tried.
It's the reason the space has been stagnant at less than 1%.
Exactly. And again, I always bring VoIP as an example because VoIP went like this, not to use steal your thing again, but it exploded because the value proposition was so easy, right? I pay $3 to call overseas, call my family. That's what I used to pay. Call my family in Israel. Yeah. And here I can do it for almost for free. Why would I give it to my phone company? Same thing here. If crypto / blockchain / whatever pays me 7% and my bank pays me less than 1%, why am I giving them my money? Right? So I think interest income is the killer app for the blockchain, for crypto and so on. And again, yes, we created it, but I invite everybody. Like Coinbase recently started paying interest. Binance started paying interest. People are like, oh, you see, now everybody's doing it.
You guys pushed them to do that.
I love it. I love that everybody's doing it because now it's legitimizing the whole concept, right? And now people are saying, well, when it was just Alex, I didn't believe him. But now all these other crooks are stealing, who used to steal from us. Again, look, Coinbase is a great company, but they extracted $2 billion in fees since 2014 from the crypto community. $2 billion outside, right? It didn't, the money didn't stay in the crypto community. It went out to whom? To the shareholders of Coinbase. What does Celsius do? Celsius earns money on the outside and buys Bitcoin and Ethereum and delivers it to the community member. We do the opposite of what the other people do. Now again, it's very hard for people to understand. They're like, what do you do? We deliver Bitcoin. We've paid more Bitcoin and Ethereum to the crypto community than all the other guys put together. And people get mad when I say that, but let me repeat it. We paid more Bitcoin, more Ethereum to the community. We bought it and paid it out than all the other people put together.
I think, Alex, you bring up a good point. I don't think people realize kind of the arrogance we've had in the space where we've complained again about this thing we've been talking about, which is the lack of interest on your money. When in reality, when you're putting money in an exchange, it's the exact same as a bank, right? You're basically giving them your capital. And
for free.
Yeah, and we've talked about in the past, I don't want to name names in this case, I'll let you do that if you want, but basically some of these exchanges in the background are, basically getting money hands over fists and stuff, basically with altcoins and using your capital in the background, because when money is on an exchange, it's their money. It's just
let's use Fidelity and Charles Schwab, right? Because I think people will understand that most people have accounts with these companies. So any brokerage account you have today, right? They used to charge you. Merrill Lynch used to charge me $300 to do a stock trade, right? Then it went down to $100. Then it went down to $50, $49.95. Then it went down to $10. Now it went from $4.95, right? It used to be $4.95. Now it's free. So let's think about it. How did it go from $300 to free, right? Where are they making the money? Where is Fidelity, who has tens of thousands of employees, right? Or the other guys are making the money. They do security lending. They take your Apple stock or your Facebook stock or any stock you give them for free. You give it to them for free, right? They're holding it for you. And they lend it out. Security lending. They charge interest, and they pay to the shareholders. Celsius does exactly the same thing. We just don't do SEC lending. We do coin lending. We lend out your coins. We collect the interest. Instead of giving it, I'm the largest shareholder of Celsius. I own over 80% of Celsius. Instead of giving it to Alex Mashinsky, we're giving it to 52,000 users. Now, I'm also on the other side. I'm a large depositor with Celsius, so I get to benefit from it the other way. But I'm not thinking, how do I give more to the shareholder? Every morning I wake up and I think, just like Jeff Bezos, just like Costco, how do I give more and more and more to my customers, to my depositors?
Absolutely.
So when you think that way, you deliver for the community. You deliver, your customers are the happiest one. They go and tell all their friends, hey, you got to try this too. Look, I've been using it, it's great. And that's the best way to scale it, right? And delivering them something they need. Again, Monday, we took the worst day of the week, right? People used to hate Mondays. I wake up, oh my God, I have to go back to work. And now they open their phone, the first thing they see is interest from Celsius Network. And their week just changes. People, it's a mental thing, right? It's like, instead of somebody pushing you down the hill, somebody's finally pushing you a little bit up the hill, right?
Absolutely.
It helps you go up and you can see the light at the end of the tunnel.
One thing I like, Alex, is obviously I've kind of talked about misaligned incentives with companies and corporate structures. You've built a system where obviously, as you mentioned, you're a stakeholder not only in the equity but also in the platform for dollars that you have in there. And I think that's such an interesting system to see that you have all the transparency through the blockchain, that you can showcase this. And one thing that I think you've pushed more than anything, again, that I still see in this space, and I know a lot of people over the last decade have held this very ideological view that we need to explain blockchain, we need to explain how Bitcoin and all these networks reach consensus. The fact of the matter is, to reach the 98 to 99% of people who have never touched a crypto wallet or anything related to crypto, we need to make it where they can just simply receive the benefits, the utility of receiving interest rates that are 50 or 100 times more than what you get in a bank account. That's a sell right there.
That's all you need, yes. And I agree with you 100%. I think look, I've been in this industry since 2013. I think we exhausted. We already found all the people who are comfortable with their holding keys. So all the people who say, not your keys, not your Bitcoin, first, I agree with them. But second, it's a small club, right? There's 7.5 billion people on this planet. So you want this club to be just the techies who know how to do this? Or do you want to bring out all the people who don't know how to use keys, who don't know what a wallet is, right? Giving people an app is much easier than giving them keys or teaching them about all the stuff that we talked about. So, and if we're serious about bringing billions of people to adopt this, again, my bar is more people than VoIP. That's more than 4.5 billion people, because that's how many people are using it today.
You talked about it in your speech. You know, you have this legacy. You've built a system that billions of people are using already, and seamlessly. We don't think about it. It would be like
no one asks us to explain how VoIP works.
Exactly right. Yeah.
Yeah. So but VoIP started exactly the same way. So when I always make the joke that it's like Alexander Bell calling Watson saying on the phone, saying, "Hey, come over here." The first call we made on VoIP, you had to put in a TCP/IP address, just like a wallet address, and you had to create a socket connection with the other side, and you had to do a test transmission, and you had to check with the other guy, "Did you get my test transmission? Okay, let's." It looks exactly like crypto.
Because we're working.
But I'm talking about 1994. By 96. We had 100 million users, and you could just click on somebody's name and it rang on the other side. We did that in a year and a half. Here we're 11 years into it, and we're still exchanging addresses. That's just lunacy, okay? So again, I'm a techie. I don't see any reason for it, right? So all the excuses that you hear on YouTube and everything else are just excuses. If we believe in this mission, if we believe that decentralization is going to take over the centralized world, look, the internet already got hijacked from us, right? The internet was a decentralized platform. Facebook now controls 60% of the entire internet. Facebook by itself centralized the entire internet into one giant pyramid. And they're sucking billions of dollars of profit out of all of us by doing that. So do we want to let that happen a second time? So all the anarchists, all the libertarians, all the people who are in it with us, we all need to pull together in the same direction. And right now we have 3,000 experiments running, right? In every direction possible. We are wasting our energy, we're wasting our efforts, and I'm sorry, but we're not going to be successful continuing it that way.
Alex, I like your practical view. I love the comparison to your previous work, and I think as someone who has obviously come to this country as an immigrant who's built something so empowering to a lot of people across the world. It's helped us connect in a global age. It's really something. I think that you have a great perspective on understanding what it's going to take to help bring this to billions of people, and that's what we need. I mean, the moment we can start getting those kind of interest rates in the world, I think we're going to get much less people going from earning nothing to actually earning a savings rate that they can use to retire, they can use to pay for their education. We're going to reduce that inequality. We're going to build an economic system with a strong middle class. And Alex, more than anything, I think you guys are doing one of the most exciting things in this space. So
thanks so much
for all your work.
Yeah,
man. I really
thanks for having
appreciate
me.
it.